Hey, it's Andreas. I've been investing for over 10 years, and in today's video, let's talk about SBB, the recovery, and if they have more still to go. If we look at the latest year here, we see a recovery of about 90%. This is not including the big juicy dividend that they paid out. If we zoom out, stock is still down a lot. However, it's not the same company as it once was. It's a lot leaner now. We will drive this point home by taking a look at the balance sheet in the company and talk some about the risks that investors need to be aware of. But for now, very nice recovery. I'm very happy with this stock, bought at about 3 kronor something. So nice recovery and a nice dividend that I reinvested into shares in this company. So market cap now about 9 billion Swedish. Let's take a quick look at the quarterly earnings report for Q2 here, and we will take a look at the consolidated balance sheet. Equity attributable to parent company shareholders 15 billion, total equity 30 billion Swedish kronor, total equity and liabilities 91 billion. Conservative ratio of debt to equity, 1/3 equity, 2/3 debt, and the financing is looking a lot more stable now than it did in the past. Mr. Synev also commented on this in the word of the CEO, talking about one of the 3 pillars being capital market activities and financing, highlighting average maturity time about 3 years something, with the interest rate about 2% something. So they're focusing on amortizing now. Obviously this is affecting cash flow. Let's take a quick look at the debt side as well regarding this company. We can see that total current liabilities, so shorter maturity, 13 billion, obviously a lot, a bond loan in this case, and long-term liabilities 48 billion. So we can see, if we compare this quarter here, the most latest quarter, to the same quarter of 2023, we can see that long-term liabilities has been reduced from 75 billions to just short of 50 billion Swedish kronor. And they have reduced this by doing, for example, sales of the property portfolio as well as with joint ventures. There's a separate box here, property portfolio changes, where they take a look at the opening fair value here from January 1st of 2024 and what has happened here up until the second quarter's end date. So we're seeing this from other property companies as well, and obviously somebody is getting a good deal on the other side of this, being able to pick up properties at prices that they think are fair and good. But as shareholders of property companies that have been struggling, that have been perhaps a little bit too greedy in acquisitions and utilizing a bit too much debt, this is the prudent move to do, and this is something that will strengthen the company and the share price in the long run. So we're seeing some sell-off here. You can pause and read the full change if you want. But regarding debt here, we're seeing that about 66% has the maturity from 2027 and forward, so a lot of late maturities, and the CEO commenting on amortizing more. Very prudent, very secure way to do, as well as opening new credit facilities and different ways to raise money, to be able to refinance, to be able to do the activities needed to keep operating. In this case, it's in society's interest to keep operating. They have a very sound strategy, and a lot of American property companies are trying to copy this. For example, remember ONL, the earnings call, they talked about wanting more government tenants. And in the case for SBB, we know that they have 3 pillars with community, with education, with the school system, and let's see here. Yeah, it's down. I have to scroll down here a bit, the residential as well. What we can see here is the listing. Residential, obviously, listing. Then we have the community, elderly care, LSS, central government infrastructure, public offices. This is government related, and also education from preschool and to more senior level. So obviously very important functions in society, and not something that government all of a sudden will stop spending on just because we have a recession. Governments are very recession resistant, as we've seen with leases and them not cancelling leases on properties. If we look at other property companies and REITs, for example, we can see that they are indeed favoring government customers because of the stability, and as investors we also love stability. But a very solid property portfolio here. Total consolidated holdings 54 billion Swedish kronor in this case in the market value. So we can see the division here, the community 25 billion, residential 28 billion, and then education a much smaller amount in this case. Some rental apartments, there's a lack of properties in Sweden as in many other countries, but then also this community aspects here with, for example, hospital and the public offices. We have the Arbetsförmedlingen in Sweden and trying to find new jobs for people, and we have different offices and for the bureaucracy. So just a very vital part of society indeed. The company is slimmed down a lot now. It's a lot leaner and smaller and operating and running on less debt than in the past. So I think that the worst is behind this company. That's the sentiment that the CEO is echoing as well. And it will be very interesting to continue to follow along with the performance of SBB. I think that a lot of new capital is very happy with recent performance. I think that old capital is still very unhappy given how far away we are from all-time highs, and there might be a lot of bag holders in this case. But for new capital, performance has been stellar indeed, and as a shareholder myself, I'm very happy with the performance of this company. That's been it for this video, and as always, I hope you guys make a ton of money, whatever investments you decide to make. Take care now, bye bye.